Welcome back. Well, it's inflation rate reporting season, and we have forecasts for inflation rate for October. Let's get a sense of what to expect. Joining us now is Oluwatomi Mayowa, Senior Analyst, Financial Derivatives Company. Great to have you on the show. Good morning.
Good morning, Ladi. Good to have you. Thank you. Thanks for having me.
All right, talk to me about the factors contributing to this projection here, about 1.08% increase. That's going to top at about almost 30% in October.
Yes,
talk to us about how you came about this number for this forecast.
Yeah, correct. We are estimating that Nigeria's headline inflation will increase by 1.08% to about 27.80% from in October, from 26.7 to in September. And before I go further into the analysis, I want to establish the fact that our estimate is actually based on Lagos market survey and our econometric model. So to some extent, it might be narrow in reflecting the general inflation level in Nigeria. And okay, having saying this, I would say what are the major drivers of inflation today? And looking at this, the biggest culprit is actually the exchange rate depreciation. That's the exchange rate pass-through. As of last year, we did some analysis about inflation factors or the drivers of inflation, and we found that the exchange rate depreciation accounts for about 70% of increase in inflation. So basically, we see that we've seen the naira actually, it depreciated to as low as 1,300 naira per dollar in October, before it started, appreciating after the CBN started to clear some backlog. So that's the major culprit. But what is more depressing is the increase in food inflation, the spike in food inflation. We're expecting, or we're estimating that food inflation would, increase to about 31.9%, and that is really, sad, disheartening, even in a time like this, because it's most consumers, their pockets are actually stressed, like the previous person has said. And why are we saying this? First, we look at the cross elasticity effect. Because of the exchange rate depreciation, we've actually seen the cost of imported commodities actually increase. And as a result of that, people are having to switch to local products. For example, wheat prices, because of the exchange rate depreciation, having to import wheat, is actually more expensive. And then we've seen that, push up the price of flour in the market. So that a bag of flour is selling for about 46,000 naira. As of last year, it was about probably 30,000 or 20 something thousand last year. So we are seeing people switch to local commodities, like for example yam, because a loaf of bread now sells for about 1,300 compared to 900 naira. So people are having to switch to local commodities. For example, yam actually increased, and because of that, that is also pushing the price of local commodities. For example, yam actually increased based on our survey by over 17% to about 3,500 naira per tuber. So it's actually good. Apart from all of this, we're also seeing logistic costs filter into prices. Diesel actually is selling for about 1,015 naira. That shows that those that are having to transport the commodities from the markets, from the farm gates to the market, are having to pay higher cost of transportation, transporting the cost. And then we have the poor road infrastructure. The state of Nigeria's road, has actually, it's worse than what it was before. And so we are seeing a lot of breakdown of vehicles that are used to transport these commodities to the market. And most at the end of the day, these commodities actually waste, even where those vehicles actually break down. So all of these things are driving food inflation. And this is coming at a time where we are supposed to see the harvest period, filter into prices that would see a decline in food prices. But we're not seeing that, because of all that I've mentioned. So it's a difficult situation for Nigerians out there. And having said all of this, what are we saying? What's the outlook for inflation in Nigeria? by December, some analysts, project, for example, IMF projects that inflation, the year-end inflation for Nigeria will be about 30%. We have seen inflation, will continue to increase, but we see that the rate at which it will increase would actually taper. We're going to see less increase, compared to previous months. And why are we going to see this? Recently we've seen CBN, renew its monetary tightening policy, in the sense that it's now intensifying, its efforts to tighten monetary conditions. And before now, we've seen, the intervention money, fueling, to some extent, fueling exchange rates, instability in the forex market. So if now that we're now seeing that tightness in the money markets, where we saw Omo bill increase to about 17.9%, and we saw Treasury bill increase to over 16% also. So we are seeing that tight condition. So we expect that the exchange rate depreciation would actually slow, and that would actually affect the inflation outlook also.
Yeah, we're definitely looking out for that, because right now it's a double whammy of rising inflation and currency devaluation at this time. So looking at, the projection for inflation for December is about 30% for the forecasts we're seeing. We're also seeing some strengthening when it comes to the forecasts, for the Naira. How do you see this interplay by the end of the year?
Yeah, like that, that's why I said that, we're going to see a slower pace. The inflation will definitely increase, because when you compare the exchange rates now to looking at it year on year, when you compare the exchange rates, what it is now and what it was last year, definitely it's a depreciation. So year on year, inflation will continue to increase, but because the pace of depreciation in the exchange rate is now beginning to slow, that would also reflect in the pace of increase in inflation numbers. So although there are other factors, but considering the fact that I already said it's a larger, driver, to some extent, a larger driver of inflation, so that would actually be, and then it will also reflect in the monthly inflation. So we see a slower pace of monthly inflation increases. So that's why we're going to see that slower pace of increase in inflation.
What do you think should be the next play, for the CBN at this time? Is it still going to be policy tightening, at this time? Is that what the consensus is? And if it's is that the only weapon they have in their arsenal right now to tackle inflation? Is it just the rates?
Okay. First of all, I would say that it's the primary responsibility of the CBN to ensure price stability. I know last time we saw the intervention money trying to say you want to, boost growth, and because of that you are doling out money, which we saw that while they were tightening the monetary policy, raising MPR to about 18.75% per annum, we saw that monetary conditions were actually still loose. And that was why, because most of the policy or things that ought to be done to ensure that the interest rates, general interest rates, are well connected to the monetary policy rate were not done. So the monetary conditions were still loose. So right now we're going to see the CBN, tighten. In fact, they already started, like I mentioned earlier, that I think as our last 2 weeks, or last week, if I'm not mistaken, they issued almost twice in a week. I think November 30th and October 30th and November 1st. So that we saw that, and then it reflected in the treasury bill market because of the tight liquidity. We saw interest rate increase to about over 16%. So because we are going to see less liquidity, we would see there will be less of that going into the exchange rate market, because most of the time that's when there's excess liquidity in the system, that usually reflects in the exchange rate market. Most people just go ahead to go and buy dollars, because we already have high inflation, and the best they get value from is in the dollar. So once the liquidity is tight, to some extent it will tame that depreciation in the exchange rates. So basically, like I said earlier on, the primary responsibility of the CBN is, is to ensure price stability, and the only tool they can use is their monetary. So it could be limited, but to some extent that would actually help inflation, especially from the demand side. So they just have the monetary policy to in taming inflation. And also to add to it, the price stability involves general price level and the exchange rate management. So through auction, they can also mop up excess liquidity in the system by having a wholesale auction. That helps to mop up the excess naira in the liquidity in the system. So all of these things I believe that the MPC or the CBN will focus on this primary responsibility,
All
as
right.
we see the approach.
All right, let's get a check on the oil market now. We're seeing oil prices quite stable this morning, but we have good news. See, Nigeria's oil output topped in Africa for October. Talk to us about this and what it means going forward for Nigeria's oil production.
Okay, let me start by saying that first of all, we must know that markets, like according to a journalist in FT, says the market do overreact and later correct themselves. Earlier on, we saw that oil price rose to a high of $90 per barrel after the war started, the Israel-Hamas war started, and then we saw it later correct itself by going down to $80 per barrel, 80 around that range. And why we've seen that decline is because one, there's been less, investors are now beginning to say that there's less risk of the war escalating to Iran, who is a major supplier of oil. And then there's the weak demand recovery in China. I think as at this week or last week, the inflation, there was a deflation in China again, 2 times this year, so about 0.2% for October. So all of these things have, because of this slow demand recovery and probably slow demand also in US, that actually slowed down oil prices to about 80% per barrel. However, we saw some response from the OPEC trying to, they raised their forecasts for 2023, trying to reassure the markets that demand is still strong. And everybody knows that that's their, strategy to ensure that oil prices are high so that they can always benefit from that. So that's why we're saying that. Well, on the long term, short to long term, oil prices will remain elevated. We believe that oil prices will continue to trade above $80 per barrel. And why are we going to see this? Because we still have the OPEC cuts from Saudi Arabia and from Russia. And they already said that might be extended till 2024. And so that would actually lead to, we also expect global demand to recover in 2024 as interest rates hike, begin to, because we've seen some pause from the central banks. So that might actually affect we see global demand improve and then oil prices, increase.
Okay.
What does this mean for Nigeria? First of all, we know that oil accounts for about over 80% of our total exports. So definitely that would actually push up our external earnings, even though we know that some of our oil are actually in swaps. So it's difficult to estimate totally how it's really going to affect our external reserves. But however, on a theoretical basis, that should lead to an increase in our external earnings. But a downside to the price of fuel, because we know that that has been brought, the subsidy has been brought in quietly, and somebody is paying for that. So it's a whole lot right there.
Yeah, somebody's definitely paying for that. Thank you so much, Oluwatomi Maiwa, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you very much, Larry.